Hello, Troy White, Hoodoo Financial, and I'm covering keywords, definitions, key terms, and the two that I want to discuss now, and I say two because they go together. I need to it's wise to discuss them both at the same time, and that is peer-to-peer lending and crowdfunding. So, uh, crowdfunding, peer-to-peer lending. Peer-to-peer lending is a type of crowdfunding. What is crowdfunding? Crowdfunding fundamentally is it's a new method of investing that fundamentally takes advantage of the law of large numbers. The law of large numbers is all about pooling resources. Pooling resources is gathering money, small chunks of money from multiple sources. So, crowdfunding, it really means exactly what it says. Crowd, there's a crowd, and that crowd funds a project. The project could be multiple types of project, but fundamentally what's occurring, a large number of people, which we call a crowd, invests money in that money is used on a project. Those projects, from an investor standpoint, often are, let's just use an example of a crowd, many crowdfund sites involve uh, real estate and business startups. So it's covering from those two standpoints. Okay, so let's take the real estate model. So there's an abandoned building somewhere. Let's call it an abandoned apartment building. So there's a developer who comes along and they say, hey, I think I can refurbish this building, but they don't have the funds to do it. But they put the project together, they do the analysis, and they start to seek investors to implement the redevelopment project. So what this developer needs from investors is the money to acquire the property and to make the repairs. So let's just come up with some round numbers. For example, let's say it costs $1 million to acquire the property and it takes $100,000 to repair the property. So the developer, let's say they only have $10,000. So this $10,000 that they have is used to get the for the fees and whatever is associated with getting the project started. And this developer goes to the crowd for the down payment and or for the entire remainder of the so if he's got 10,000, they need another $1,090,000. So the crowd, it will come up with these funds. So the crowd comes up with the money. Let's say there's 300 investors, and all of these 300 investors come up with some small portion that totals $1,090,000. So the developer would take this $1,090,000, acquire the property, fix the property, meaning repair it, repair all the damages that need and remodeling that needs to occur, and then they would refinance this property, assuming that the after repair value is greater than the amount that they borrowed from the crowd. So that was the $1,090,000. So let's say that the after repair value is $1,300,000. Well, they would refinance the property, pay the crowd back the monies that they owe, that the crowd submitted for the project, and whatever profit that was promised is paid to the crowd, and then the developer is now the owner and operator of this apartment building. Now, that is crowdfunding. That crowd has funded this project. Now, peer-to-peer lending is another form of that. However, in this same scenario, the developer would go to the crowd for a loan. So the developer is a peer, the crowd is the other peer. So peer-to-peer, they are loaning the funds to do this. So the terms of the loan would hypothetically be a 1 year, 12-month loan at 12% interest, balloon payment due, at the end of the year. And this is a significant return on your investment in terms of if you were to invest in a bond, you wouldn't get that type of returns. But peer-to-peer lending is giving these short-term deals. It's giving you a great return. So investors are really profiting from this method nowadays. And so those are just, but also these crowdfunding and peer-to-peer loans are being used for business startups as well. So let's say you have some whizbangnew.com, and you need, along the way of growing your company, you have sourcing needs where you need capital. So a lot of these new firms are turning to the crowd for funding. So, but also this is also being combined with the blockchain, and we're seeing ICOs, initial coin offerings, that are occurring on crowdfund platforms. So business startups go to the crowd to ask for funding for their startup capital, and but they are issuing tokens, and these tokens are in the form of cryptocurrencies, and that is where the term ICO comes from, initial coin offering. And so these are some of the tools, some of the methods, some of the new mechanics of the fintech technology and financial services tools that investors and entrepreneurs are using. That is the new method, the new way of the future, new wave of the future. So become aware of what's happening. And thanks for listening.